What's going on, guys? My name is D. Anthony with evolutiontraders.com. If you guys are looking how to day trade options, buy calls, buy puts, you don't really know, where to start. Maybe you have a buddy, maybe you've seen on Twitter someone making all kinds of money, driving a Lamborghini, sitting out at the beach, and now you guys want to learn how to trade options. You guys are in the right place. Can't guarantee you a Lamborghini, can't guarantee you a vacation on the beach, but if you put in the work, stay dedicated, control your emotions, you can most definitely make money in the stock market. Rule number one, it's going to take money to make money in the stock market. Rule number two, if you don't have money and you cannot pick up or have enough time to pick up a second job or a third job or a fourth side income hustle to kind of grow, a nice little savings account to start day trading, definitely get funded. What does that mean? Work for a prop firm. You can get funded $50, $100, $150,000. That sounds too good to be true. I know it does, but it's not easy. You do have to pass a combine, meaning you need to show that you can be profitable, make $3,000, manage your risk, so forth and so forth. If you guys want more information, look down in my description box below. Now, if you want to really make money trading options and you want to learn how to buy calls, buy puts, what should you be doing, so forth and so forth, you're going to need a strategy. Okay. You're going to need something that's been back tested. You're going to need something that's been proven. Now, does every strategy work 100% of the time? Absolutely not. Does every single professional day trader win 100% of the time? Absolutely not. Some of your best traders on Wall Street maybe win 40, 50, 60, 70% of the time, meaning that they are managing risk very, very, very tight to the vest. What does that mean? If a trade technically breaks down from their entry, they will exit that trade and take the small loss, because an experienced trader knows that there will always be another trade where you will make that money back. Now, an inexperienced trader or a newer trader will always feel like, I'm not going to make the money back and I need to hold this position. I need this trade to come back. I need the market to turn around. That's the difference between someone who's been trading for multiple years on end and has a proven and tested strategy versus someone who comes into the market and has gotten lucky once or twice, and now they really don't know what to do because, let's be honest, 2022 has not been the best year for new traders. However, the average true daily ranges and the volatility that we're getting both to the long side on these, intraday bounces and dead cat bounces and so forth, and then the flushes have been so good and beneficial to a lot of day traders. A lot of people are making a lot of money right now in the stock market, while investors are kind of ripping their hair out because their portfolio is slowly bleeding down 10%, down 20%, down 30%. You look at the NASDAQ, at one point in time was down 30% on the year. Clear market, quote unquote crash, right? Everyone's nervous. You have day traders out there coming into the market and shorting the market, buying puts. Now, you do need to understand a little bit of market structure. You do need to understand some price action. I'm going to give a quick example. What I have on my chart is the 1 hour time frame. I am looking at NVIDIA, and we are looking at 4 days worth of price action. So every dark gray box is 1 day intraday, 2 days, 3 days, 4 days. What we're also looking at here is the 200-day moving average as well as the 20-period moving average. This is the 20 SMA. This is a 200 SMA. Now, if a stock is trading below its 200-day moving average, we know that the selling pressure is still there. That does not mean that the stock is not going to bounce and that every candle is going to be red, but we have to understand that price action is going to respect that as a level of resistance. Now, it would be safe to say for a short term, being that we're looking at the 1 hour time frame, that if a stock like NVIDIA gets over its 200-day moving average, now we can start thinking more on the call side of things. We're looking to bet on the stock to go higher. So we're going to need a setup on that. If we're trading underneath the 200-period moving average and underneath the 20-period moving average, we are looking for the stock to go lower, and we are looking to buy puts on the downside. So if we kind of take a look at today's price action, Notice how the candle stopped here, 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 and then now in the after hours is kind of just treading sideways. If Nvidia tomorrow, right, was to lose this area of 171, I would take a short position. I would be buying puts. And here's another thing that you need to understand as a newer trader. When you are day trading or scalping, meaning you're not trying to hold this for, 2-3 days, you're not trying to hold this for a week, you're not trying to hold this for a month, but if you're playing weekly options expiration contracts, you want to be buying contracts that are in the money, okay? In the money, or literally right at the money. I am not going to take a day trade on Nvidia at 171 at price of 171 break, and I'm not going to buy 155 calls. That's absurd. You're never going to make any money. Now, if it flushes all the way down here, yes, you will. And that's called getting lucky, right? I'm not even going to talk about luck, because in this game, yeah, it takes a little bit of luck to make money, but at the end of the day, no one knows if the stocks are really going up or down. We just have to use our best technical analysis that's in front of us and kind of take our best shot at our, trade that's going to give us the most edge. So the edge here that I see is a lot of consolidation at this price. If I do lose this, I'm not going to hesitate, and I'm going to take a put position in this, which means I'm going to look to short Nvidia through 171, and I want to buy in the money or at the money put. I am looking for at least 1 hour's worth of candles to kind of really build below that, and I'm looking to take profits on that move down. I'm not looking to hold that trade for 2, 3, 4, 5 hours. Now, if it continues to run and the market is moving in your favor, you can kind of closely monitor that and kind of squeeze every last water out of that rock that you can. But typically when I'm going to go in, I'm going to take 5-10 contracts of Nvidia, and I'm going to start scaling as soon as those contracts are profitable. I'm going to sell one, I'm going to sell another, I'm going to sell another, and then I'm going to close out my position. Now, whether that position runs another 10 points after I get out, that's okay. That's not my money. My money was when I got into the trade where I wanted to, and I took money where I wanted to. Now, if we're looking to buy calls and you're looking to play options to the top side, first thing that Nvidia would need to do is break over the 20 period moving average. That's rule number 1. 2, you're going to need room into the next supply zone, at least to be able to make a trade. So if we kind of look at this high here, a price of around, let's see, these highs from today as well as Friday, highs of around 179. If we were to break the 20 period moving average, that price is putting us at 175. Now ask yourself this: how experienced are you? If Nvidia was to break and this was to move from 175.50 into 178, it's only a couple points worth of room. Would you be disciplined enough to take money $1.50 higher? If you can correctly answer that and say yes, if I got in and if I took one contract and I made $100 on this contract, I would sell and be happy with it, then by all means take that trade. If you have a little bit more difficulties taking profits because you want to hold too long, you want to hit the home run, you want the 100% winning trade, then this is not going to be a trade for you. Your trade where you're going to buy calls is not going to be until price action. You see this 20 period moving average start to slope higher, and you see this 200 start to slope down, and you see this price action not only get over today's highs, but also Friday's highs, as well as last Wednesday's highs here. And as soon as we get over here, this is where you're going to want to get long. You're going to want to let the price action clear out the 200-day moving average, and that's where you're going to want to get long. Remember, guys, it takes discipline, it takes focus, and a lot of screen time taking trades. The only way you're going to learn is by taking trades. The only way you're going to get better is by using real money. I hear some people recommend, start with a paper trading account. But for me, there's just no emotions knowing that you can throw down $25,000 on a trade on a paper trading account, and if you lose it all, nothing happens. You have no skin in the game. You need to get skin in this game if you want to be a professional, if you want to be consistent. Guys, I hope this helps. If you're looking for more information and you want to join my Discord and learn my strategies, those links are all down in the description box below. I will see you guys on the next one.